Good morning, everyone. Good morning. Hope you guys are doing well. We don't have too much to cover in today's stream. There was some news I think we'll go over. I still have to watch this stream that Elon Musk did. But he had a pretty, I watched a little bit of it and he was saying some really interesting things. So I definitely want to at least cover a bit of that. We'll do some portfolio updates towards the end of the stream. So you guys can kind of see what's going on with the portfolios. And then we're going to be talking about Trump's Golden Dome, experiment, if that's what you want to call it. We'll be talking about that today and who the major players that could potentially benefit from that. And we'll be talking a little bit about quantum, specifically D-Wave. All right. So we got kind of a shorter stream, I think is what today's going to be. It's going to be kind of a short stream, but we'll see how it goes. All right, guys. So let's get into the video. All right. So this is today's portfolio. We had a little bit of a pullback. So I'm down $14,000. Yesterday I was down about I think $10,000 or $12,000, but today's down. We're down 14,000. So not a big deal. We were kind of expecting last week that there would be some type of a pullback. So this is, not unheard of, but it wasn't that bad of a pullback. It was, I think just a couple basis points. Again, it's just a market doing market stuff. I think people are still digesting the whole the Moody's report that came out, their downgrade of the U.S. credit. I think it was more so for that. But again, yesterday, right after that report, right after the market opened, we were in the red and then we slowly started grinding up. So we pretty much just gave up those gains from yesterday. So we kind of traded flat, but not bad at all. All right, guys. All right, let's move on. Okay, so this is going to be the first one up. Is going to be Trump unveiling his vision for the $170 billion Golden Dome missile defense plan. All right. So I'm going to go over this in just a second, but let's just watch it. All right. So President Donald Trump on Tuesday formally introduced his concept for the Golden Dome, a proposed $175 billion missile defense initiative that would, for the first time, incorporate U.S. weaponry in space. For those who may be uninitiated, way back in the day, there was something called the Star Wars Pact. Yes, the actual Star Wars Pact. And it basically prevented the United States and I think Russia from, having weapons in space. So it looks like this administration is kind of bypassing that and saying, screw it, we're going to just do it anyways. So really interesting, but let's watch the video. All right.
In the campaign, I promised the American people that I would build a cutting-edge missile defense shield to protect our homeland from the threat of foreign missile attack. And that's what we're doing. Today, I'm pleased to announce that we have officially selected an architecture for this state-of-the-art system that will deploy next-generation technologies across the land, sea, and space, including space-based sensors and interceptors. And Canada has called us and they want to be a part of it. So we'll be talking to them. They want to have protection also. So as usual, we help Canada do the best we can.
It always cracks me up every time I see Trump speak, man. As always. All right. Anyways, these are going to be, let's just continue on with this. So the whole idea behind the Golden Dome is just this big, massive net, imaginary net over the United States. And now it looks like it's going to include Canada to help basically protect from missile attacks or some type of incoming threat, right, from overseas. Maybe potentially like a North Korea, maybe a China, maybe a Russia, right? So we already have what's called a Patriot defense system, and that is sprinkled all throughout the Middle East, all throughout, Europe. In NATO, you have Patriot batteries in Southeast Asia. They're pretty much everywhere. So this would protect the whole Eastern front, the whole Western side of the United States. But the Golden Dome, again, is probably going to be focused on other critical areas. But I really think it's going to be up and down the West Coast, because that in Alaska is right over the water. So Looking a little more further in, according to the Congressional Budget Office, and we kind of talked about this yesterday, it doesn't matter what kind of president is in there, red, blue, doesn't matter. There's always going to be spending, right? And this is no different. According to Congressional Budget Office, the space-based components alone could cost up to $542 billion over 2 decades. Trump has proposed an initial $25 billion in funding as part of his broader tax legislation currently under consideration in Congress. The United States allocated approximately $850 billion to the Department of Defense for fiscal year 2025. Now, remember, there was budget cuts, and that's what caused Palantir to basically drop, right? Budget cuts, along with Alex Karp, who since rescinded his intention to sell Palantir stock, that sent the shares going down as well. So I don't know, maybe the timing was perfect for Palantir, for people to get in on the cheap. Again, there's that conspiracy, that tinfoil hattie thing, that maybe this was all planned for Palantir to go down in value so people can jump in. But again, shout out to anyone who picked up Palantir on the cheap. All right, amid the fanfare of Trump's announcement, funding for the Golden Dome hasn't yet been secured, and much of the program remains conceptual. All right, that's a big important part right there. It's just an idea that's being floated. They're working on an actual, thing. And what does this all have to do with investing and, us as investors making money? Well, let's talk about it. All right, so these are some of the bigger names that are going to be involved. All right, you have SpaceX, led by Elon Musk, has emerged as a forerunner to assist in development of the Golden Dome defense missile system. All right, the company is collaborating with data analytics firm Palantir and defense company Anduril to build crucial components of the system. Anduril is a big name. Like, people are waiting for this company to IPO. There has been some kind of whispers that, Anduril is expected to IPO. They're just waiting on better market conditions, right? They don't want to release their IPO and then we head into a recession. So waiting, I'm really interested in seeing if Anduril is going to IPO. They would be, if Palantir is going to be the Skynet, the software version of the Department of Defense, Anduril would easily be the robotics part, right? Easily would be the robotics part. The actual, quote unquote, the Terminators. And it's funny because Elon Musk had mentioned this, not Palantir and Anduril by name, but he did mention that, right now the human race is on that cusp of, heading into that dystopian future, with Terminators and Skynet. But hopefully now, with all, the smart people that are heading these companies, and, regulation of AI, not so the harsh regulation that would probably come from other administration, because this administration is focused on deregulation, but it won't be regulated to the point where these companies can't innovate. So Musk was making the point that we don't need 100 referees on the field. We need maybe a couple, just a few. So that was just a good kind of a good data point. But their plan includes launching 400 to more than 1,000 satellites, and this is SpaceX, for tracking alongside a separate fleet of 200 attack satellites, potentially armed with missiles or lasers, right? SpaceX is not going to be focused on the weaponry, right? So just to make that point, but that just sounds crazy. It's just getting crazier and crazier. If you want to look at Lockheed Martin, right? Lockheed Martin announced its readiness to support the Golden Dome project, but they have not been selected as a key partner, all right? You also have Lockheed Martin, that they won the, was it not the F? Yeah, is it the F-35? Yeah, it is the F-35 fighter. So they have that on their books. Boeing won the F-47, which is going to be this like really beefy jet that has like autonomous drone technology installed in it. It's going to be really wild. So that is kind of what's going on with this project. I'm keeping an eye on it because I want to know who the actual partners are going to be, and if there is going to be some type of demand from data centers, definitely data centers, and definitely the players in those data centers, right? You're going to have like companies like AMD, Nvidia, all these other companies that are providing that hardware to the data centers, right? Because there was talk of Musk, and this is going to lead me into my later segment, but there was talk of Muskonomics, right? Muskonomics, Musk being involved in all types of different things. He has internet providing satellites, right? So imagine what that could mean for like data centers aren't going to go away, but what that could mean for, this partnership that they have, right? So it's just really, really interesting, really fascinating. So moving on from that, D-Wave is making some waves, all right? D-Wave quantum leaps as it releases its Advantage 2 computer system. And this was kind of long awaited. A lot of people were keeping their eye on this and waiting for this release. So finally it's come out, and it looks like it had a huge jump in share price. D-Wave jumped as much as 30%. Okay. Now I'm not a quantum, mechanic. I'm not a quantum, analyst or whatever. This whole realm of quantum computing is still relatively new to me. So I'm still learning about this, but even from an investor perspective, I'm still trying to understand, what is the value proposition here? Who could use, someone like a D-Wave who can use quantum? Because there's a lot of players in the space right now, and they're all vying for, for market share. This could easily turn into something like, you'll have like 50 players, and then by the end of, the year or two, there'll be a bunch of acquisitions and a bunch of, companies will fall off. And then, later and later, it's just, you get to the one major player, right? The one big player. So, D-Wave looks like it has home field advantage because they were able to release their quantum computer, earlier than some other competitors. But let's read into this. So D-Wave quantum shares, QBTS, surged during early trading Tuesday afternoon after the company announced the general availability of its Advantage 2 quantum computing system, which is its most advanced system and capable of solving problems beyond the realm of classical computers. All right, again, don't ask me what that means. From what I gather, quantum means it could be in two states at once, if that makes any sense. So I have no idea, like classical computers, what that even means. I have no idea, but yeah, quantum computing, really interesting, right? The new system is now generally available. Customers in more than 40 countries can access Advantage 2 system via D-Wave's quantum cloud computing services. All right, and it just talks about their qubits and couplers and 20-way connectivity, which I, again, have no idea what any of this means. And I have a background in IT, but when it comes to quantum stuff, it's just so new to me. I couldn't even understand it. But if you're an investor and you want to take advantage of this whole, quantum wave and get some exposure to quantum, there is a very popular fund from Defiance. All right. Now, Defiance, of course, there's some people that love them, some people that hate them. All right. I'm just, showing you exactly what this is. All right. This is Quantum Defiance, their premier ETF, right? And it just goes over a couple things. This is not a high yield ETF, a dividend income ETF. This is more of an appreciation play. So if you're really bullish on the sector of quantum, then you could probably take advantage and just buy the whole market, buy the whole sector. Like I bought a whole semiconductor ETF, cepi, from yieldmax. So, if you want to take advantage of something like quantum and get exposure to it, then you can just look at something like this. This is a decent product. It's not bad. It looks like it's actually recovered very, very well from liberation or liquidation day, whatever you want to call it. So it looks like it's doing really, really well. So again, entirely up to you guys if you want to invest in this. But again, this is from Defiance ETFs /QTUM. All right, guys. The expense ratio on this is about 40 basis points. So that's actually not too bad. In my opinion, that's not too bad. But some index purists out there, the bogle heads, the really classical investor, I'm going to start calling them that. They want low expense ratios, index funds, things like that. But this wouldn't be a bad addition, in my opinion, if you wanted some quantum exposure. All right. So Elon's in the news. All right. This is the big one for the day. All right. Because Elon recently had a couple talks, some in Qatar and then some over the internet. He did like a Zoom call or something. But he was saying a lot of really interesting things, and he was just kind of giving his thoughts on everything. So just want to briefly go over this, especially for Tesla holders. This might be really important for you guys. In the second half, well, first, Elon Musk on robots, litigious shareholders, and AI. In the second half of Elon Musk's interview on CNBC, the Tesla CEO touched on a number of topics, including interest in acquiring Uber. I guess he just wants to acquire them so he can just, plug in their, his cars and then, just basically take the market share away from Uber, which would be wild. Litigious shareholders, he basically wants more control at, Tesla, because it looks like he's been getting sued left and right when he joined Doge. And, there's a lot of shareholders that were kind of pissed that not only were Teslas getting destroyed, Tesla, dealerships getting ransacked and all that kind of stuff. But, you have shareholders who are kind of pissed that this guy is literally destroying the shares of Tesla, right? Has nothing to do with it. Has not, his political leanings, whatever, was destroying Tesla, right? So I could see why a lot of shareholders were probably pissed by that. And there was some that openly came out and started a lawsuit, but I forget who. It was just a line in an article some time ago when this was like peak Doge, all right. And his prediction that we'll all want to own our own R2D2 or C3PO. So he made this point when he was talking to the host. He was saying that like the Tesla bot, the Optimus, is going to be multifaceted. It could do a lot of things. And he predicts that people are going to want their own R2D2, their own C3PO, right? That can do all their AI stuff. Instead of typing it in a phone or whatever, you can just have your Optimus robot just help you with that, right? You could talk to it. It could grab groceries for you, can cook dinner. Like, the amount of things that this Optimus robot can do is the same as a human. So he was just saying that he thinks in the future he could see 1 million Optimus robots being produced in the future, and everyone's going to want their own AI robot. Demand for humanoid robots will be insatiable, Musk says, and expects they will be Tesla's biggest product, predicting 1 million robots will be made by 2030. And here's to the point about some of the benefactors, okay? The people who will actually, or the beneficiaries, I should say, that will make money from this. To power the development of Optimus bots, Musk will continue to rely on GPUs from Nvidia and AMD. As long as Nvidia makes GPUs better than Tesla, we'll keep buying them from Nvidia. I wouldn't be surprised if Tesla tries to create their own ASICs chips or their own type of chip in the future. But Musk is a pretty smart guy. He likes to keep everything kind of in-house. He has his own data center, his own internet, his own battery factory, his own, everything else. So his own manufacturing, all the Teslas are manufactured in the United States. So I could see that probably in a couple of years, maybe he'll try to pioneer into semiconductors, maybe create his own chips. It probably won't be something like as good as Nvidia for obvious reasons. I mean, these are two companies that are just based, their whole existence is based on creating, creating GPUs, creating CPUs. So, for Tesla to try and catch up to that, I don't think it's really an external threat. I wouldn't even consider that a bear case against Nvidia or AMD. But Musk is right here saying he's going to keep buying Nvidia and keep buying AMD. So if you want to get in on that craze, you can always look at Nvidia or AMD. All right, and this includes the building of another gigawatt training cluster in addition to the 200,000 GPUs at a facility in Memphis. All right, those are a lot of GPUs, 200,000 GPUs at a facility in Memphis. And this is obviously coming from Nvidia or AMD. So that's a big deal. Like, again, people were worried that Nvidia, no one's buying their chips, right? AMD, no one's buying their chips. Well, here's proof that big companies are still buying their chips, all right? Musk's artificial intelligence venture XAI or XA1 is currently building the most powerful training cluster in the world near Memphis with 1 million next generation Nvidia Blackwell GPUs. Demand for Nvidia GPUs is always going to be there. All right, guys, I don't care what pundit comes out, what bear case comes out for Nvidia, the insatiable urge to consume Nvidia Blackwells by the world's biggest companies are just unstoppable. All right, in 6 to 9 months, this facility will be the largest gigawatt training cluster in the world powered by Grok, all right, or powering Grok. So finally, on the question of AI's impact on society, Musk believes that we are in the big bang of intelligence explosion. And one thing is for sure, it won't be boring. Again, he was talking about, at this point, he was still like mentioning the whole like dystopian future, what it could turn into, the whole Terminator scenario. So that's just really interesting. All right. So with Klarna, just real quick, Klarna was in the news. Klarna is, really popular for this right here, for Uber Eats. You can pay later. It looks like they're taking some losses. All right. Klarna's losses widen after more consumers fail to repay loans. Can't say I didn't see that coming, right? I think a lot of us probably saw something like this coming. People are going to order a bunch of food and not pay it. So just wanted to include this little bit in here. All right, Klarna's net loss more than doubled in the first quarter as more consumers failed to repay loans from the Swedish buy now, pay later lender as concerns rose about the financial health of U.S. consumers. All right, so this is like a double-edged sword. This is telling people that, this is telling the economy that, hey, people are no longer buying food, or they're going into debt and then not paying it back, right? Those are two really bad indicators. So Klarna does expect to IPO in the United States at a later time, or expect to IPO period. I don't know if it's going to be United States or not. I think it mentioned it somewhere in here, but they do plan to IPO. So this might be a headwind, all right? For anyone thinking about investing in a Klarna, just keep that in the back of your mind that Klarna does have some problems, all right? REITs hiked their dividend payouts by 2.56% in Q1. So congratulations to any REIT holders. It looks like the REIT sector or the REIT industry is doing well. They wouldn't have been raising their dividends collectively, or, unless they were doing well. Okay. So just wanted to put that out there. All right. I think might be a really short stream, guys, because we're at minute 20 and I pretty much breezed through a lot of the news that I wanted to cover. Again, this is a very boring or very short news day. Not a whole lot going on. For the S&P 500, we're down almost 40 basis points in the red. Okay. So again, we kind of traded flat. This is when, we were down on the Moody's report, and then we slowly climbed back up, right? But again, for at least this week, we're still up 65 basis points. So no love lost there. But again, we didn't see any real gain today. I think this is a break, just a small little pullback. I think people are still worried about the whole economy and still thinking about that Moody's downgrade. NASDAQ down 37 basis points. Again, same exact thing with, the S&P 500. We had that big dip with Moody's, and then, from the dip all the way up, we're still up about 1%, percent and 9 basis points. So we're doing okay. Gold actually had a huge amount of inflow today. So gold, again, a lot of people were selling out of gold, but it looks like it's starting to come back. Again, we use this as a barometer for investor sentiment. It seems like people are still worried about the Moody's credit rating, and again, still worried about the whole recession that's looming in the future. So we'll never really truly know. All right, Bitcoin, we are sitting at 106,000. I think this peaked at 107. Yeah, there it is, 107,000. So Bitcoin is still doing very well. Gold is still the best performing asset year to date, up 23.8%, whereas Bitcoin is up 14.3%, right? This is a massive pump, and it just keeps pumping. So maybe it'll beat gold out in these next coming couple of weeks. US 10-year Treasury, no change. It stayed pretty much relatively flat today, so no big deal there. VNQ looks like we were down 0.5% for the day, which kind of sucks because it's just been fluctuating up and down. But hopefully you will get past this. We'll see at least $91 maybe in this week. All right. So let's hop over to the poll. So for the poll, the question was, which fund managers do you prefer? 0% of you said no, not Kurv, all right, which is a total shame because Kurv is actually a really good fund manager, but I understand why. All right, yieldmax got 56% from you, roundhill from 22%, and 22% said from other. All right, so for me, I'm going to go with roundhill. I'm a big fan of roundhill. Obviously, I'm not trying to shill them as it goes, but I do like roundhill. They've been good stewards of my money so far. So let's go ahead and end that poll. I don't know. I guess Defiance would count as other. I don't really know any other high yield income. I guess Global X would probably count as another one. Let's see. All right. Citizen Year says, when should I hop on? Hey man, we got to get that stream going, bro. All right. We got to do some type of live together. I don't know what the topic would be, but we should absolutely do it. I think maybe we should, we were talking in your Discord. I think we should do a pro and a con, maybe like an interesting argument. I think that would be a banger of a stream or something. Or I don't know, maybe we talk about something else, but we should definitely do a stream at some point. All right, guys, let's see what else we got. We got portfolio updates. And like I said, this is going to be kind of a shorter stream because the news was kind of dry today. Not a whole lot coming out of Wall Street. Citizen of the Year says, you know what the topic will be. I can already tell. All right, guys, let's look at the portfolio updates and then we'll pretty much close it out. All right, so this is the portfolio update for today. Again, sitting a little red here, but not a big deal. I have no new changes. I have no new buys. All right. Nothing has changed in this portfolio. It's pretty much the same. I'm just rocking with it for now. We did collect some dividend income from PLTW and NVW, so that was very nice. So now I'm just sitting on $2,400 worth of buying power. Speaking of buying power, let's take a look at margin. All right. Of course, you guys know I use a lot of margin. I'm addicted to that extra buying power. So here we are. I would have to see a $42,000 drawdown before I get a margin call. Assuming we don't head into a recession or a Great Depression or whatever comes next to the financial markets, I should be okay. But if I blow this portfolio up, you guys will be the first to know. All right. So moving on to the last one. Citizen says also passport broing. Damn, I would love to talk about that, man. I got a whole, yeah. I still got to do the other channel. All right. I am working on that other channel. So I went on a little weekend getaway. I filmed a bunch of stuff. I really want to get that video put together, but I got to basically do all the editing on my phone because, yeah, I don't want to move the video files onto this computer. But anyways, moving on to portfolio stuff. You guys will like that. If you're a fan of like expat life or, you know, like Thailand content or living overseas content, I will definitely publish that and I will make an announcement for you guys so you guys can kind of see, you know, I guess what a day is like. All right. But that's not every day. I live a pretty boring life out here. I don't really do a whole lot. So even that was very outside of my normal routine. All right, here we go, guys. So this is the portfolio on M1 Finance for REITs sitting at 190,000. Technology, ETF, VGT, since we're down for the day, this was sitting at 6,000. Now we're down 7,000. Again, not a big deal, at least for me. This thing is recovering quite nicely. At one point, it was down like $50,000. So it is really nice to see it climbing back up. BDCs, no new changes, no new buys. Crypto ETF, just sitting pretty, right? This is a Bitcoin ETF from iShares. It is the iBit ETF, and it's just sitting there. You know, it does have a little bit of risk now that I'm thinking about it because iBit has their Bitcoin trust in the hands of Coinbase. All right, and Coinbase had that whole breach, that whole, you know, issue, and now the DOJ is investigating Coinbase. So again, this is just one of those risks you have to keep in the back of your mind. I still don't see Coinbase going anywhere. They just got included in the S&P 500. This is going to be a blip on a very long, you know, trajectory. But someone like Fidelity, they have their own crypto trust, like within their own bank, within their own ecosystem of products. So they have their own trust, which is a good thing. For iBit, for iShares / BlackRock, you know, they keep their coins with Coinbase. So whenever you're thinking about investing into these ETFs, just keep that in mind, whether it makes, you know, a big deal to you or not. For me, I just went with, you know, iBit because I don't even remember why. I just went with iBit. I didn't want anything from Fidelity, I guess. Scott H says, do you think Roundhill is safer or more stable versus yieldmax? It depends. That is a very loaded question, but let's explore that for a bit since we're still really early on the stream. All right. I'm going to cherry pick here. Okay, guys. So let's see. What can we look at? All right. I'm going to use two, and I always pick on tsly because it's the easiest one. All right. But let's look at tsly. Let's just look at the max, right? So you have tsly just completely getting killed out there. This is like the whole NAV erosion thing that they've been suffering, okay? Whereas if we look at someone like, or if we look at Tesla, like the actual company, right? Let's see, tsly came out in 25 November 2022. So let's do 5-year, 2022. Well, you guys could kind of see it from the chart here. November. All right. So Tesla up 50% over that same time period. Well, October, but you guys get it. It's up a lot. Meanwhile, you know, tsly is kind of just eroded to trash. Whether you care about that or not, entirely up to you. I'm not here to bash, but I want you to look at another ETF provider. All right. There's Kurv ETFs. Let's look at their stuff. I forget what their Tesla one is called. Their Tesla one is called TSLP. All right, so TSLP ETF. All right. And I'm going to answer the more direct question, which one's more stable, but I want to give you a bigger picture of how to look at this stuff. All right. So let's look at the same time period. We'll do 1 year. Okay. 1 year for tsly, 1 year for curve. You guys be the judge there. 38% down on yieldmax, and for tslp, we're actually up 10%. Now, when you factor in distribution income, totally different. All right. These are totally different. So when you're talking about what is more safer, you have to beg the question, which one is going to probably erode, right? That is, in my opinion, what safety means. You're going to want an ETF, again, something that's going to grow the NAV, something that's going to grow in value and still continue to pay out a consistent income. Now, if you're a yield junkie and you just want high amounts of distribution and you don't care about the NAV price, then yieldmax, products by and large fit that bill quite nicely. But for roundhill, for me, I want NAV appreciation with, consistent income. All right. I don't need, 100% distribution on a 100K portfolio. If you're making, 30% distribution, I mean, that's still $30,000, right? $30,000 a year. Make it 200,000 and now you have 60,000, right? That's close. That's enough for you to, do a lot of cool stuff with. So again, when it comes to the argument, which one's more safer or better or this or that, it's very objective. Well, not objective. It's very subjective. It's whatever the individual thinks, because there's a lot of different mindsets out there. There's a lot of different thoughts. So it's kind of hard to say which one is actually better than the other. Again, it's up to the investor. If you really don't care about NAV and you care about high levels of distribution, then, again, the yield max might fit your bill. Whereas with roundhill, if you care about, the NAV appreciating in value and staying stable, with a moderate amount of income, and from my research, and I'm going to be publishing a video on this, but from my research and just looking at all these different funds, it seems like 30% is the sweet spot for a lot of these guys, whether it's yieldmax, roundhill, or even curve. Like 30% is the sweet spot to prevent NAV erosion. So that is my thoughts on all of this. I hope that answered the question extremely well, as best I can. So, but yeah, that's pretty much it, guys. I don't have anything else for the stream. So unless anyone has any other questions, I think I'm going to end the stream. I know we're cutting it really short. We're basically at minute 30 here, but I really have no other news to cover. And I am working on a couple of videos. I am working on the return of capital video. I definitely want to explore that, because the more and more I interact with other, either community members, or I interact with, people in the comment sections of these videos, the more I see that there's a huge misunderstanding. Some people think you're paying taxes on the distribution. Others understand that it's ROC, but they don't know the impacts that has on the actual ETF. So I'll be doing a lot of videos on that stuff here soon. What about NEOS? Or Neos. I mean, I like Neos. Like I showed SPY-I, the SPY-I ETF in my last video. You still owe me $50 for that FYB system, Citizen. But yeah, if you look at, SPY-I, I mean, they've done tremendously well. As well as you could hope for, right? You have to keep in mind that they're also paying out like a 10% distribution throughout this whole time. So, I mean, you probably want to up this a little bit, right? But they have been doing really well. Neos does have some interesting funds. Nothing I would personally invest into. Their flagship one, QQQI, just got an award. So for anyone who's, interested in the Qs, this one could be a top contender. But they did get an award for that. And these aren't paying super high distributions like you're used to from yieldmax or roundhill or anything else, but they're paying very consistent and they're protecting your money, right? I mean, those are two, very, I want to say traditional, finance principles. You protect the capital, the principal, get paid a decent distribution, right? So this is, in my opinion, Neos is pretty good. If we look at some of their other ETFs, they have a BTCI. The IYRI is probably my favorite out of the bunch, only because I invest in real estate and I invest in REITs. So I really like this one. I don't really touch CSHI or TLTI. I mean, I don't know, like, to me, investing in these are kind of pointless for a younger investor. I know there's this whole idea of, if you're going to take margin, use, these 0 to 3 month, treasury T-bill ETFs. I mean, whatever floats your boat, you could do that. You absolutely can. And I think there is a level of protection there. That's exactly what a lot of hedge funds sort of do. But with IYRI, I like this one. This one, if I didn't have a bulk of money in real estate, like in REITs, if I was starting from complete scratch, this would be a top contender for my real estate exposure. It pays monthly, right? You're getting an 11 or 12% distribution. The expense ratio is pretty decent, right? It's not that 99% or that 1.2% that other fund managers are charging. And NEOS is very, very reliable, okay? And not only that, looking at the underliers, and I mean the actual securities it owns, Prologis is one of the best in-class REITs you could own. American, and this is only because I know REITs, right? I know a lot of these REITs. American Tower, again, one of the best in class. Welltower, best in class. Equinix is a data center, best in class. Digital Realty Trust, I won't say they're best in class, but they're definitely behind Equinix. Simon Property Group, not a fan of SVG. I used to be. I used to invest in this. This is a mall REIT, so again, having some exposure to malls, not a bad thing. The dividend yield is pretty good, but they have, at least last time I looked, and this was, a year or two ago, they did have or still maintain an investment grade balance sheet, which is a big deal, right? They're very responsible with their balance sheet. Even throughout, the Rona, they were still paying out a dividend and they were still being very responsible with their balance sheet. So Simon Property Group, I tip my hat to them because they are still a really good REIT. I just don't want to invest in malls because I think of the whole e-commerce, Amazon thing that's out there that is a real threat to malls. Realty Income, I mean, come on. Everybody knows who the monthly dividend paying company is, right? Public Storage, again, I own this one. Crown Castle, I own this. This is another tower REIT with American Tower. CBRE Group is not a REIT, but they are they basically corner the market. They own the market, as a matter of fact. But they do real estate listings, right? They do real estate listings and kind of provide data analytics. But I mean, if you look at this, they own the market. There's no other one that comes close. CBRE is a really good company. They're very well known in the real estate space. But yeah, anyways, this is my favorite one to answer the question from Citizen of the Year. What would be my favorite or what's what about NEOS? And this is kind of my favorite ETF. I don't own this one, but again, if I was starting from scratch and I wanted the exposure to some type of real estate, not VNQ, because VNQ only pays out like a 4% quarterly dividend. And not only that, it really lags behind the S&P 500 by a wide margin. Okay, so if you're all about returns, then that is a big deal. But IYR fits the bill nicely. It's really nice, monthly payer, and it's going to be in like the 10 to 12% range. So again, I'm not promoting them. I'm not saying go buy them. I'm saying you can start your research from here. All right. So anything else before I kick myself off the stream? I mean, honestly, does anyone have any questions, anything at all? All right, I'm going to take that as probably we are all good and I'm good to close down the stream. Again, I wish there was more spicy news out there. I wish I had other topics to talk about. I do have, again, some other videos coming out that are going to be talking about return of capital, the return of capital debate. And I'm working Pepsi or Coke. Come on. Come on, citizen. Stop being a troll. So I got some other videos coming out about return of capital. I also have another video that's coming out. This one is probably going to have to do a lot of research on. I'll release that when I release that. But yeah, that one's going to play on the whole return of capital debate. And then if you guys are interested in any topics, and you can drop them in the comment section. Let me know if you're interested in any topics that I can cover. If I know enough about it, I'll definitely cover it. If I don't, then I'm, sorry. One of the videos I do want to come out with is something on MSTR, because I really, really, think MSTR is an interesting company. So I really want to do that. Best yield max ETF. You know what? Let's do that. I'll take that challenge. Let's do that. Best yield max ETF. Okay. This is my opinion. Okay. And I again mentioned this in the video. The last video I did, for the framework that I use, the best one, in my opinion, depending on, and let's talk about what best means. Best means that capital is protected and you're getting a consistent stable distribution. Okay, that to me is going to be best, right? That's what I'm looking for. I would put, let's see what else we got here. Not GPT. I would put SDTY as the one, right? This would be, if I had to start all over and roundhill didn't exist, I would probably go with SDTY. And the reason is pretty obvious. I mean, you can look at SDTY. All right. If you look at this, you look at the max. Actually, I need a cherry pick, right? So we do this, SP 500. Again, 1 month, you guys can see 15% gain over an 11.6% gain with a almost 30% distribution rate. And this pays weekly. So again, if I had to choose all over again, this is probably something I would incorporate into my anchor position, or something I would incorporate into my portfolio. But yeah, that's the challenge, guys. I mean, I'm a very, I don't like yieldmax. I don't like a lot of their products, but again, you got to give credit where credit is due. And SDTY is definitely something that I would incorporate if I had to choose something from yieldmax, right? Also, there are other ones, not the target 12s. Yes, the portfolio ones. I'm a huge fan of Cepi, not so much the other two. And I'll tell you why. So the crypto portfolio option income, GPTY, AI tech, there's no, as far as I know, there's no near peers. There's nothing to compare this to. So you don't know the performance of these two ETFs, but you do know the performance of Cepi. Okay. Cepi is the yieldmax semiconductor ETF. And the way I look at it, I compare it to SOXQ. And I also compare it to SMH, which is another Avanex semiconductor fund. So these are two funds, right? Two semiconductor funds. And again, I'm going to cherry pick here, but if we look at the 1 month, okay, we can see, and we look at Cepi. Oh, come on. And we look at Cepi ETF. All right. So if we look at that, we look at the 1 month, up 17%. All right. SOX or SMH up 30%. SOXQ up 30%. The thing you're not including in this, because it can't, obviously, it's just a chart for price action or for share price, is the dividend distribution. Okay. This is sitting at roughly about 30%. Again, this is why I think 30% is the sweet spot. So you're getting appreciation of your shares and you're getting a stable distribution week to week, right? So again, this is why I think Cepi is a cut above the rest, because it's doing well, because you have performance data, you have near peers that you can compare it to. Whereas the other ones, it's whatever the fund manager thinks is good, right? And not a knock on them or anything like that, but it's whatever they think fits in the LFGY fund or the GPTY fund, right? It's whatever, like if you study enough funds, you'll find out that some managers suck at picking. The most infamous of all is the ARK Innovation Fund. I mean, you can just look at those two charts, compare them to QQQ, and they just underperformed by a wide margin. They just got absolutely wrecked. I don't know why anyone invests into those funds. Again, I know being a fund manager is not exactly an easy job, but still, I mean, I like Cepi because, again, you have near peers. It's a sector I'm really interested in. You can compare it to something, a near peer, and you can see that it's keeping up very well. So again, that is my take on best yield max fund. Let's see. So I think anything else, guys, before I end the stream. Citizen here asked Pepsi or Coke. I guess I'll answer that. I think I'm gonna go with Coke. Not the stock. I wouldn't buy the stock though. Pepsi or Coke, I wouldn't buy the stock. They don't pump out that 200% yield that I'm looking for. So I wouldn't even touch those. But I'll buy their drink. Let's see. Yeah, but that's it, guys. I'm gonna end the stream right now so I can start working on those other videos. But I appreciate you guys joining the stream and cutting it up with me and just chilling, hanging out, and us just talking about finance news. So with that being said, guys, you guys have a great rest of your evening, a great rest of your day, wherever you are in the world. I appreciate your support. And I will see you guys in the next video or the next stream. You guys have a great night. Take care.